Okay, so welcome back. No? So, welcome to another discussion for stock acquisition. Okay, subsequent to the date of acquisition. So, in the previous videos, we have discussed 100% acquisition. So, it's accounting for um, stock acquisition subsequent to the date of acquisition for 100% stock acquisition. So in this video, we shall be discussing a uh, partially owned subsidiary, no? Using a full goodwill approach, no? In measuring your goodwill and non-controlling interest. Okay, so we have here our illustration. So assume that on January 1, 2014, Perfect Company acquires 80% of the common stock of Sun Company for 310,000. So at that time, the fair value of your non-controlling interest is estimated to be 77,500. So on that, the following assets and liabilities of Sun Company had book values that were different from the respective market value. So this is actually the same illustration we had in our 100% stock acquisition discussion. Okay, so we have here our inventory undervalued by 5,000. Yung land natin undervalued by 6,000. Yung equipment natin undervalued by 80,000. Yung building we have overvalued by 20,000. And yung bonds was actually overvalued by 4,000. Okay, so all other assets and liabilities approximately equal to their respective fair values. So January 1, 2014, the equipment and building had remaining lives of 8 years and 4 years, respectively. So inventory is sold in 2014 and 5 inventory costing is used. So goodwill, if any, is reduced by a 3,125 impairment loss during 2014 based on the fair value basis or full goodwill, meaning the management has determined that the goodwill arising in the acquisition of Sun Company relates proportionately to the controlling and non-controlling interests, thus the impairment. So let's compute first the goodwill, no, and the non-controlling interest. So since we're using full goodwill, di ba, and then given naman yung fair value for non-controlling interest, which is 77,500. So we have actually book value for net assets of 300,000. No? So that's actually the sum of the equity account, no, the subsidiary, that's the common stock of 200,000, retained earnings of 100,000. Okay. So, we have i-add na natin yung net undervaluation of our assets, or net assets, which of 75,000. Actually, that's the land inventory 5,000, land of 6,000, equipment of 80,000, building overestate of 20,000, and bonds payable of 4,000. So that's actually 75,000, diba? And then the fair value for net assets, that's 300,000 plus 75,000 undervaluation for net assets. We have fair value for net assets of 375,000. Okay? So to compute for our goodwill, we have consideration transfer, diba, of 310,000 plus the fair value of our non-controlling interest, which happens to be 77,500. Okay? So the total is 387,500. Okay? Then, i-deduct natin yung fair value for net assets. No? We have a goodwill of 12,500. Okay? So, to estimate, to determine the how much is allocable to the goodwill, to the controlling interest, and to the non-controlling interest. So we have allocated 10,000 to the controlling interest. Now, that's actually consideration transferred less yung share ni controlling interest sa fair value of our net assets, which is 300,000. So we have 10,000 goodwill. Also, for the non-controlling interest, its share is 2,500. That's actually 77,500 less 75,000. 75,000 is actually share the non-controlling interest sa fair value for net assets. So therefore, out of the 12,500 goodwill, 10,000 kay controlling or kay parent, is 2,500 kay non-controlling interest. Okay, so we'll first determine the percentage. No? So to determine the percentage ni controlling out of the total goodwill, simply divide 10,000 divided 12.5 is actually 80%. Then 2.5 divided 12 is actually 20%. So that's the percentage share ni controlling and non-controlling sa goodwill. Okay? Kasi we'll use that in the allocation of the impairment. Since we are using full goodwill, so my share si goodwill, diba, sa ano, share si NCI sa goodwill. Therefore, if pag-impair din si goodwill, may share din sa non-controlling interest. Okay. So we have here our trial balance of the Perfect and Son, or meaning ni parent and subsidiary, no? On December 31, 2014, and then out of the extracted, out of the trial balance na we have here, ito yung net income ni ano, net income ni parent. We have 164,000, okay, and then a subsidiary then the net income is 50,000. You take note, my dividend income, diba? My dividend income si Perfect, no? Or si parent, 24,000. So that's actually proportionate, diba, sa declare ni subsidiary. So the subsidiary declared 30,000 na dividend. So it's actually 30,000 times 80%. Kaya may dividend income si parent na 24,000. Okay? So ano yung entry ni parent, no? For the year 2014, the first year of acquisition. So the record acquisition is a debit to investment in Sun Company for 30,000 and credit to cash. Also, to record the dividend, so that's actually a debit to cash and credit to dividend income for 24,000. Okay? And we'll discuss now our eliminating entries. No? So, the first entry is to eliminate, diba, the equity account of the subsidiary. No? Then, that's a credit to investment in Sun Company and non-controlling interest based on the percentage or the controlling interest percentage, diba? Kasi the total book value or the sum of the equity account of the subsidiary is 300,000. So, i-credit natin for the investment account is actually 300,000 times 80% is 240,000. And then, the non-controlling interest share in the book value is actually 60,000. Okay? The second entry is to recognize the undervaluation and overvaluation for assets. So then you take note that the net undervaluation is actually, diba, 75,000. So hatiin yan siya ni controlling and non-controlling. So yung share ni controlling sa 75,000 na net undervaluation of our asset is actually a credit to investment account. 75,000 times 80%. And then yung share ni non-controlling interest and net undervaluation of the asset. It's actually 75,000 times 20% is 15,000. Okay? So, the third entry is to recognize the goodwill, diba? So, yung goodwill natin. Of course, we've computed goodwill of 12,500. Then, may share si non-controlling interest dyan na 2,500. And then, yung share ni controlling or ni parent shall be credited to investment in Sun Company for 10,000. Okay? The fourth entry is to, diba, record the amortization of excess and for the impairment loss. Okay. Impairment loss natin. Okay, so we have cost of goods sold. That's actually for the inventory. Yan siya. For the inventory, we'll debit ito cost of goods sold. No? So undervalued yung cost of goods sold natin. Yung high equipment na kay building is net 5,000, diba? So debit natin to depreciation expense. So, yung kay inventory, cost of goods sold, then inventory, Yung kay equipment, that's a debit to depreciation expense, credit to accumulated depreciation equipment. Okay. Yung kay building naman, nasa actually a debit to accumulated depreciation building credit depreciation expense. Sige, net natin itong depreciation. Yung kay bonds, that's a debit to interest expense and a credit to discount on bonds payable. Okay? As to goodwill, we have total goodwill of 3,125. So, but yung goodwill na 3,125, i-allocate yan natin siya, no? I-allocate natin siya to the controlling and non-controlling based on the percentage. So, 3,125 times 80%, yan siya. 2.5 yung share ni controlling sa impairment. However, and then, yung share ni non-controlling, that's 3,125 times 20%, that's actually 625. Okay? So, yun siya. But since we are using full goodwill, so we'll recognize 3,125. No? This includes share ni controlling and then the non-controlling. Okay? Okay, the fourth entry is to eliminate the dividend income. The perfect is 24,000, and then eliminate din yung dividends paid, no? And then to establish share ni non-controlling interest sa dividends, which is 6,000. Okay? Yan siya. Then we'll recognize share ni non-controlling interest sa adjusted net income ni subsidiary. So, diba, we have 50,000 na net income ni subsidiary. Yan, 50,000. And then, we have excess of 11,000. So, we have adjusted net income ni subsidiary of 39,000. Multiply natin the 20%, we have 70. Pero, may share man din si may share si non-controlling interest sa goodwill impairment, which is 625, diba? So, deduct natin. So, yung net non-controlling interest and net income, or yung share ni subsidiary sa adjusted net income is actually 7,175. Since may share si NCI sa non-controlling may share si NCI sa impairment of the goodwill. Yan. Okay, so as to our worksheet, no? So, same thing, you are to combine lang naman the accounts for the parent and the subsidiary. However, you take into consideration the eliminating entries. Okay? So, as to sales, we have 600,000. It's actually 400 and 200. Then we eliminate dividend income. And then we have recognized the amortization of the inventory, diba? That's an increase to cost of goods sold. So that's 170 plus 115 plus 5 is actually 290,000. Yung depreciation expense natin, the broker, that's 5,000. Again, that's the net of the undervaluation of depreciation of equipment, and then overvaluation of the depreciation of the building. Actually, 50,000 plus 20,000 plus 5,000 is actually 75,000. And then our interest expense is actually 1,000. Other expenses of 40,000 plus 15,000 is 55,000. And then, ating goodwill impairment loss is actually 3,125. So, we have a consolidated net income of 175,875 less the non-controlling interest in the net income of subsidiary is actually 7,175. We have computed that in Nina. So you have net income attributable to parent to amounts to 168,700. Okay. As to statement of retained earnings, so we have eliminated the retained earnings of Sun Company. So ang mga forward lang is yung kay perfect or kay parent plus the net income attributable to parent, which is 168,700. Okay. siya. Yan. And then, yung dividends paid, no? Yung kay parent na lang kasi we've eliminated yung kay subsidiary, 30,000. So, we have consolidated retained earnings of 408,700. Diba? As to balance sheet accounts, no? So, we have here, combine natin yung cash, that's 194 plus 75, that's actually 269. Yung accounts receivable, 75 plus 50, 125. Yung inventory, 100 plus 75. Then plus and minus the amortization of the excess. It's actually 175. Yung land, 175 plus 40 plus yung excess na 6,000 is 221,000. Yung equipment, that's actually 200 plus 150 for 350. Then yung buildings, 600 plus 450 minus 180, you have 870,000. Okay? And then, we have discount on bonds payable. That's actually 4,000 in 1,000. You have 3,000. And then, you have goodwill of 12,500 less the impairment loss of 3,125. You have 1975. Then, yung entries natin, no? Actually, the purpose is to eliminate, diba, the investment in some company account. So, yan siya. But this total, 310,000. Okay? So, therefore, may eliminate na yung investment in some company. Okay? Okay, so we'll have for the accumulated depreciation for the equipment. That's 112,500 plus 80,000 less 80,000 plus 10,000. That's actually 122,500. For the accumulated depreciation building, that's 337,500 plus 240 minus 160 minus 5. That's actually 412,500. Okay. For the accounts payable, that's 200,000. Diba? Ayan siya, 200,000. For the bonds payable, that's actually 300,000. Okay. For common stock, that's actually 500,000. And then, na-eliminate mo na itong common stock ni subsidiary. Diba? And then, yung retained earnings natin, computed kanina na 408,700. Okay. Siya. Then, of course, the non-controlling interest. Since mag-appear lang man si non-controlling interest in the consolidated, diba, financial statements. So, the balance of our non-controlling interest is actually 78,675. No? So, based on our entries, no, in our living entries, no, the balance is 78,675. Okay? So, yung total balance ng consolidated column natin is 2,022,375. Okay? Okay, 2,375. Okay. Okay, so also we have here another format, no, or formula in the computation of your consolidated net income and net income attributable to parent. So we have here the net income of the subsidiary plus the net income of the parent plus net income of the subsidiary, no, less the dividend income to determine the net income from own operations. So we have 140 for the parent and 50 for subsidiary for a total of 190,000. And then let's have the add or deduct the amortization of our excess. So we have for inventory, we have 5,000. For equipment, it's actually 10,000. No. Then yung building, since that's actually 5,000. So addition siya kasi diba overstated yung depreciation. So understated yung net income. Here we add. Bonds payable, that's 1,000. And then yung impairment loss natin na 3,125, 3,125 yung share ni parent, tsaka 625 yung share ni subsidiary. So we have consolidated net income of 175,1175. And yung non-controlling interest natin, which is actually 7,175, diba? That's actually 39,000 times 20% less 625, 7,175. We have net income attributable to parent of 168,700. Okay, so the computation of our retained earnings, no, that's actually retained earnings beginning the parent plus the net income attributable to parent less dividend declared to parent. You have consolidated RE of 408,700. Okay. As to income statement, no. So again, you may refer this one. No, you may refer this to your worksheet, diba? No. You have sales of 600,000. Yan siya. Sales of 600,000, and then cost of goods sold of 290,000. Yan siya. Cost of goods sold of 290,000. And then expenses, diba? No, the total 134,125, including the impairment cost of 3,125. Okay, so out of the 175,000 consolidated net income, diba? The 7,175 attributable to non-controlling interest, and then for the controlling interest is actually 168,700. No? So yung composition ng consolidated net income mo na 175,875. We have 7,175 for the non-controlling and 168,700 for the controlling. Okay. Okay, so as to balance sheet, again, you may refer this to your worksheet. So, ang importante lang is yung recognized goodwill of 9,375, diba? And then for the equity section, you recognize non-controlling interest of 78,675. Again, yung non-controlling interest will be presented after the controlling interest. Okay? So, subsequent to the date of acquisition, yun siya. Ito yung data for the second year after acquisition. So, may dividends, si subsidiary na 40,000. So, yung share ni parent dyan is 80%, diba? Kaya it's 32, that's 40 times 80%. No? So, the record, that one, of course, is a debit to cash and credit to dividend income for 32,000. Okay? So, what are the eliminating entries subsequent to the date of acquisition? Okay? So, the first entry actually, no, is to convert from cost method to equity method. Okay? Kasi, dapat the parent will record its share. Ma-record niya yung share niya sa pag-increase ng retained earnings ni subsidiary, diba? Kasi the retained earnings of subsidiary is 120,000, and then 100 for the beginning of 2015, then the beginning of 2014 it's 100,000. So may increase siya na 20,000. Okay, we multiply natin with the controlling interest. We have 16,000 as our retroactive adjustment. So we have 16,000. Okay, and so that's the first entry, no? So we have to determine the share of the controlling interest in the increase in the retained earnings of the subsidiary. Okay? Kasi, yung share ng controlling sa increase, masyado recorded na siya sa second entry natin. No? Kasi, our second entry is to, pag-eliminate natin, no? Eliminate ng equity account ng subsidiary against investment account and then non-controlling interest. So, you take note that the common stock of the subsidiary is 200,000. Then, its retained earnings balance now is 120,000. Okay. So, you credit it to investment in some company by the controlling interest, which is 256,000. That's actually 320 times 80%. And then, share in non-controlling interest, the 320 times 20%, you have 64,000. Okay? Our third entry, our third entry is actually to recognize, diba, the undervaluation and overvaluation of our assets. So this is basically the same entry we had on the previous year. It's actually the entry to record the difference of the fair market values and book values at the date of acquisition. Okay, so the fourth entry is to recognize the goodwill, no? Since in their full, we have full goodwill of 12.5, diba? Then sharing non-controlling interest na 2.5 and then the controlling na 10,000. Okay? So the fourth entry is actually to record the amortization of excess for the 2 periods. Okay? So we have last year and the current year. So, yung sa last year, we'll debit it to retained earnings and non-controlling interest. Okay? Okay? Kasi, previous year, di ba, we have, we have 11,000 as our, amortization of excess. So, yan, 11,000. So, therefore, ang share dyan ni parent is actually 80%. Because 11,000 times 80% plus yung share ni parent sa impairment of the goodwill, which is 2.5. Okay? So, again, yung amortization last year is 11,000 times 80% to get the parent's share. Plus, yung share ni parent sa goodwill of 2.5. So, that's actually 11,300. Okay? Yung share na may non-controlling interest is actually 11,000 times 20% plus non-controlling interest share in the impairment of the goodwill of 625 last year. So that's 2,825. Okay? So for the current year, of course, the same entry, no? Will debit depreciation expense for 5,000 and then yung interest expense for 1,000. Again, wala nang inventory, no? Kasi, recognized na siya previous year. So, kasi 1 year lang yung life niya. For the equipment, building, and bonds payable, we are to amortize it over its life. Okay? So, yung entry niya, no, as to inventory, was a credit to 5,000. Then, yung accumulated depreciation equipment, is a credit to 20,000. 20,000 na kasi it's 2 years already. And then, yung discount on bonds payable is actually 2,000 na. And then, yung accumulated depreciation building is actually 10,000 na. And then, of course, the goodwill is 3,125. Okay, so, the fourth entry, the fifth entry, yan. The fifth entry is to eliminate the dividend income, no, and eliminate the dividend speed, no. Yan. So, you have dividends paid of 40,000. Then, di ba, yung share ni controlling is 80%, that's 32,000. And share ni non-controlling is 8,000, it's 20%. Our last entry is to recognize the share ni, non-controlling interest sa net income of the subsidiary. So, di ba, the net income of the subsidiary is 75,000 less excess amortization na 6,000 na lang, no? 6,000 na lang siya. Yan siya. 6,000 na lang for 2015, no? And then, that's net, no? Adjusted net income. Diba? Adjusted net income ni subsidiary is actually $69,000 times 20%. We have share in non-controlling interest in the net income is 13,800. Okay? Yan siya. Okay, as the worksheet, so same thing, no? You combine, no? So we have sales of 750,000. We eliminated dividend income of 32,000. We have cost of goods sold of 340,000. So wala nang amortization kasi na fully amortized na last year. And then depreciation expense of 75. And then interest expense of 1,000. Other expense of 105,000. Okay? So we have consolidated net income for 229,000 less the share ni non-controlling interest sa net income of the subsidiary na 13,800. So we have 215,200 as our net income attributable to parent. Okay? So, for the statement of retained earnings, no, so first, we have to convert, diba, the retained earnings of the subsidiary, the parent rather, to the consolidated retained earnings beginning. So that's actually, diba, we've credited 16,000. Ito siya, no? Yung retroactive adjustment natin, that's 16,000. Yan. Okay. And then we've debited 11,300 as share ni controlling sa previous year amortization of excess. Yan. Plus the impairment of the goodwill. Yan. Okay. That's actually 408,700. So you noticed, no? That's actually the retained earnings balance. Yan siya. Previous year consolidated. So, yung eliminating entries natin actually provides na dapat yung beginning balance ni retained earnings ma-convert siya to the consolidated retained earnings balance previous year. Okay, then we have eliminated Sun Company's retained earnings, yun siya. Then also we've eliminated the dividend paid of the subsidiary. Okay, so the consolidated retained earnings is actually 563,900. Okay. As to balance sheet account, same thing then, no? Combine natin. No, for the cash, we have 306,000. For accounts receivable, we have 230,000. For inventory, no, fully amortized, we have 270,000. And then for land, no, that's 221,000. So, yung land, since it's a non-depreciable asset, so hindi man siya, di ba, ma-amortize. So, the equipment, we have 350,000. And for the building, we have 870,000. That's actually net of the, yung eliminating entries natin na 180. As to discounted bonds payable, it's actually 2,000 na lang. We've recognized 4,000. Then, may 2 years amortization of excess na tayo. And then, for goodwill, we have 12,500. Less impairment of 3,125, we have 9,375 na. And then, yung investment in Sun Company natin, dapat ma-eliminate siya for consolidation purposes. Okay, so as to the credit amounts for accumulated depreciation equipment, we have 125 plus 85 less 80 plus 20, that's 150. For accumulated depreciation building, that's 375,000 plus 255,000 less 160,000 less 10,000, we have 460,000. Okay, so as to accounts payable, we have 200,000. Okay, so yung common stock of 500,000, then na-eliminate them into common stock in subsidiary, the 200,000. And then we have to establish also the non-controlling interest. So the non-controlling interest balance based on our working paper eliminating entries, that's actually 84,475. Okay, so we have here computation then. So alternative computation of our consolidated net income and net income attributable to parent. So we have net income of the parent of 192,000 plus yung kay subsidiary na 75,000, that's actually 267,000. Then i-deduct natin yung dividend income, diba? So to determine the net income from own operations of 160 plus 75, that's 235. Then yung amortization of excess natin, it's actually equipment of 10,000, no? Then buildings of 5,000 addition, and then deduct yung amortization of your interest expense sa bonds. Amortization of discount on bonds payable sa bonds is actually 1,000. Okay, so wala nang inventory kasi fully amortized naman siya on the first year. Okay, so we have here the adjusted net income of the parent plus the adjusted net income of the subsidiary. You have 229,000 as our consolidated net income. Deduct lang natin yung share ni non-controlling interest sa net income ng subsidiary. You take note that wala tayong impairment sa goodwill for 2015. So we have net income attributable to parent of 215,200. Okay? Then to compute for the consolidated retained earnings subsequent years. So we have, diba, ending balance of our consolidated retained earnings last year, that's 408,700, plus net income attributable to parent of 215,200, less dividends declared of 60,000. So you have consolidated retained earnings end of 563,900. Okay. So again, how to arrive, no, at the beginning balance of our retained earnings, no? So that's actually 404,000 na beginning inventory sa separate FS ni parent, diba? That's 404,000. Okay. 404, no, 404,000 yan. Then we are to determine the net increase, diba, of the retained earnings of the subsidiary. That's actually 20,000 less yung previous year's amortization of excess is actually 11,000, no? So that's actually ang net niya is 9,000 times share ni controlling na 7,200, pero induct mo yung share ni parent sa impairment ng goodwill. So yung net na talaga is 4,700. So you have 408,700.